Hi everyone, this is Jason Burak of Wall Street for Main Street. Today is Monday, May 24th, 2010. My blog, jasonburak.com, is about to cross over the 2,000 page visit traffic milestone for this month, and I want to thank everyone for visiting my blog and reading the articles. I haven't gotten quite the comments and discussion and participation on there that I want to, but it's starting to come on the Wall Street for Main Street Facebook fan page. But I encourage you to go over to the blog and participate and put comments down there, and also on these videos here on the video blogs over on the YouTube channel. But if you guys have good suggestions for future articles you want me to write, or whatever topic you want me to cover, I'm open to that. But thank you very much so far for the traffic, and my goal is by October I want to have 5,000 page visits a month for traffic on my blog. So if some of you are social media professionals and you could help make some suggestions for how to increase my traffic, I would be very happy. Just want to talk a little bit about the market today, do a little recap. As far as commodities go, gold and silver were up just a little bit. Oil was basically flat. I think this is a very good opportunity to start getting long oil. I know the hedge funds are shorting it now. The reason they're shorting it is because they think it's probably going to be in a trading range here. If oil does drop, it will drop only slightly more. If it drops below $65 a barrel into the $55 to $65 a barrel range, you are looking at a lot of those offshore oil rigs becoming unprofitable. So if that does happen, you can expect those companies that are operating those rigs to cut back on production. You can also expect OPEC to cut back on production too, if oil drops another 15-20% below this mark. So you're looking at a pretty nice little bottom here for oil. It's the summer driving season. So I really don't anticipate oil prices going too much lower. I mean, they could if there's a humongous market crash, which is still possible, but oil is definitely looking like a good long-term investment in the oil stocks. If you want a safer investment as opposed to the oil and gas companies like an ExxonMobil or a Petrobras, the better investments for the most part are the oil well and services companies. These companies are picks and shovels companies. The reason they're called picks and shovels is because during the gold rush, the people who made the most money during the gold rush, you know, in like San Francisco and in Alaska during the 1800s, were not the miners who found gold. In fact, most people never found gold. The people who made the most money were the entrepreneurs and small businessmen out there, like a Levi Strauss, who sold picks, shovels, other utilities to the miners so they could go and look for the gold. So that's the type of picks and shovels I'm talking about. So for those in oil, that would be an oil well and services company like a Transocean, which is their symbol RIG, rig, or a Diamond Offshore Drilling, symbol DO, or a Baker Hughes, or a Halliburton, or those guys, because those guys get paid no matter if a company like British Petroleum or Petrobras finds the oil or not. So you guys, you know, if you still want a good exposure to the higher oil prices going forward, and you're a peak oil believer like I am because I've done a lot of research, I think the picks and shovels company, the oil well and services company, and the drillers and those guys are the safer way to play it, as opposed to the actual oil and gas explorers and those vertically integrated companies who also have refiners, and the refiners are not doing too good either. And those large companies also have refining businesses. But in the next couple days, I will finish a article on peak oil and bridging the gap between a fossil fuel economy and also an alternative energy, zero carbon clean tech economy. Our politicians in Washington and some of the people in the Department of Energy, I don't know if they just don't understand the problem in the Department of Energy, and the congressmen, if they're being, you know, misexplained the problem, but they seem to think that solar and wind and all these other technologies that are in alternative energy, they do have a bright future, no pun intended, but they're not ready to completely take us off of fossil fuels. We need those gap bridgers. We need something to transition us. And we already have these expensive gas station and pipeline infrastructure, especially for natural gas, because we're really the only country in the world that has really good pipeline infrastructure to store natural gas and pipe it across the country. So I think we need to take advantage of that. So if you're looking to get into clean tech and also energy investing, you need to respect the fact that investing in these infrastructure projects, you know, to replace the gas stations and the pipelines is going to be very, very expensive and cost prohibitive. Our government is not going to be able to fund all of these projects. Taxes are going up, and there's been a lot of malinvestment, especially in the Department of Energy. So my article is going to be covering this in depth. I just want to talk about it a little bit, so maybe get you guys a nice little preview here. And I'm heading off to the gym, but I'll be posting this video blog later, and let's get and talk online. Hopefully you'll visit the Wall Street for Main Street fan page and make some comments, and also visit my blog. Have a nice week, guys.